straight to our first management. Kirloskar Ferrous, they reported an actually weak standalone set of numbers. A little bit disappointing. Margins were hit by higher coking coal prices, and the top line as well did get a hit owing to the slowdown in the tractor industry. Well, let's welcome Mr. RV Gumaste, who is the Managing Director of Kirloskar Ferrous. Hi, good morning, Mr. Gumaste. Thanks so much for joining in. Well, we're getting used to you giving such good numbers that on the standalone basis, X of ISMT, which have turned around very, very well, it looked a little bit disappointing. So let's clarify a couple of aspects then, Mr. Gumaste. On the casting volume side, that's where the street is very bullish on. But for the past quarter, the volumes were down by close to around 1%. Could you tell us whether you stick to that 15% volume growth in the casting business for this year?
I think the tractor industry slowdown is affecting the overall volume of casting sales. I expect still we should be able to manage 10% growth in the overall casting sales this year compared to the last year.
Right. So instead of 15%, it will be around 10%, right?
Yes. Yes.
And pig iron sales, they should be around
pig iron sales, we have a couple of shutdowns which we are completing by end of this month. I think the volumes would be more like 550,000 instead of 6 lakh ton.
All right. What about the spreads in your pig iron business? When will they improve?
Yeah. As you know, we have some headwinds on pricing of pig iron. And one of the things which is affecting us is the high iron ore prices. Iron ore prices have not corrected in line with the iron and steel prices. Whereas the coal prices have corrected downwards, iron ore prices have rather gone up. This is affecting the margins of the pig iron. As it is, the market headwinds are there. So I expect that things should improve shortly. So it improves in short period. Let's hope things should improve. But also the seasonal effect of monsoon is there. The construction activities slow down and the construction steel consumptions go down. I think it may take a couple of months to things to improve.
You said that iron ore prices have not corrected as much as
yes.
the end product prices. But the big trigger for you would be your iron ore mines coming on stream as well. When do your captive iron ore mines become functional?
Yeah, they get affected because of the government approvals involved. I think Karnataka has the new government. The government formation happened, so things were not moving. After that, a couple of movements have happened in the right direction. Out of the 2 mines, what we have one mine, I'm quite hopeful that it should become operational shortly. I've been talking, but always I disappoint all of you because nothing much in my hand. We have to go through the government and the various statutory approval requirements. But the mine is ready to operate.
But Mr. Gumaste, now give us your best guesstimate. We have been asking you, I think, not for 1, not for 2, not for 4 quarters. In FY24, you think these iron ore mines will get commissioned? I've been reading reports, in the last year or so, where in FY23, some were factoring in a couple of lakh tons coming in for iron ore mines. But till now, that's not coming. For this year, you think, second half of the year, you're optimistic with the new government coming in and everything clear that you will start get these mines operational?
Always optimistic. I am quite hopeful this year it will become operational. At least one mine out of the 2.
At least one mine. And what kind of, and in FY25, hopefully you will have, the entire captive iron mining that you had planned on stream. So what will be, their savings, if you could give us a number, cost savings because of getting it from captive sources at current iron ore prices?
No, I have already a couple of times I have told you.
100 crores, right?
100 crores. But, the iron ore mine 2, which is Channakeshava mine, has gone into problem because of the change in the forest declaration. It has become the reserved forest. So there are some issues. I hope that we should be able to still sort out and make that mine also operational, but more difficult.
Mr. Gumaste, you're saying you're hopeful. Should analysts start penciling some things in their estimates? Because
See,
they have been penciling in the past.
I have
Yes,
told,
please go ahead.
I have told a couple of times that iron ore benefit is one, but we are not going to be bogged down by the iron ore benefits. We are moving ahead with many initiatives, so it won't depend solely on only iron ore mines.
Okay, all right. And as I said at the start of the show itself, ISMT have done a splendid turnaround. In the last few quarters, when you took over it, it was negative. You got it to mid-single digits, and now it's in double digits. What's the headroom you have to improve margins at ISMT from here? And also on a blended basis, what will your margins look like for the company on the whole, ISMT, and then for the entire unit?
The opportunities on alloy steel and seamless tubes under the ISMT are really phenomenal, and we are working on that. As you know, we could turn around very quickly and very fast. And we are working on the important aspect, which is the energy cost, the power and the fuel. I think there is huge opportunity there. We are going solar, we are going renewable energy, we are going for wind, green power, and ultimately we should look forward to go to green steel. And that is the direction which is win-win in terms of the cost optimization as well as going green.
Okay. And what does that mean for the consolidated margins?
See, currently I would say our power and fuel is around 15 to 16%, and we look forward in next 2-3 years to cut down this cost by as much as 8 to 9% out of this. So it's a substantial, cost reduction of possibility there.
All right. Very quickly, we don't get to speak to you too often, but you had acquired that asset in the NCLT, right? It was pending approvals, Oliver Engineering. Could you tell us how much money you're paying for it?
I think it's about slightly above 100 crores.
100 crores you're paying for it?
Yeah, more than 100 crores, slightly more than 100 crores. And we are awaiting the lenders to come back, confirm to us so that we can go to NCLT and complete the transaction.
So 100 crores plus 25 crores of capex, right, for this? So it will come to around 125 crores.
I think it would be maybe 30-40 crores of immediate capex requirement. I take it as about 150 crores to start with, and we will have to work from there to develop this foundry as one of the the North casting supply foundry for us. So the story starts with the acquisition and the startup.
Got it.
All right. Thanks a lot for joining in, Mr. Gumaste, and giving us all those details. Wish you good luck for the remainder of this year. And hopefully, at some point, the captive ore mines do come functional as well. With that.